What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And for today's video I have a bunch of good news directly related to our story. I will show you two finds from authorities to Goldman Sachs and Citadel Securities. I will show you comments on this news from our headliners, from John Burda and from Mark Basile. On top of that, I will show you an update regarding the Mark Basile's litigation in New York Supreme Court. I will show you an update from Richard Hofman regarding his arbitration against FINRA. So, and before we dive deep into all of this, I want to ask you just one thing. I want to exchange my hard work for just 1 second of your time. And the only thing that I ask you is just to hit the like button for YouTube algorithm. In this case, this video will be pushed forward to a broader audience and eventually it will help us to win our battle. So, just hit the like button. And let's start with this news. We are on frontnest.com and this article was published just yesterday and it's titled "The SEC now fines Goldman for inaccurate blue sheet data." And let me quote you this in details. The SEC has now fined Goldman Sachs for inaccurate blue sheet data according to the latest SEC press release. Goldman Sachs was charged $6 million in penalties for failing to provide complete and accurate securities trading information, known as blue sheet data, to the SEC. So, again, Goldman Sachs and again illegal activity. And let me show you what did John Burda say regarding this news. So, he wrote this tweet: press release, Goldman Sachs to pay SEC $6 million in penalties for providing deficient blue sheet data for immediate release. And he added, the Securities and Exchange Commission today announced settled charges against Goldman Sachs and Core LLC for failing to provide complete and accurate securities trading information known as blue sheet data to the SEC. Goldman agreed to pay a $6 million penalty to resolve the SEC's charges. According to the SEC's order, over a period of approximately 10 years, Goldman made more than 22,000 deficient blue sheet submissions to SEC. The order finds that as a result of 43 different types of errors, these submissions contained missing or inaccurate trade data for at least 163 million transactions. The order further finds that Goldman lacked adequate processes to verify the accuracy of its electronic blue sheet submissions. Guess who GTS clears through? Coincidence? Maybe. And we know that GTS Securities is one of the two companies that allegedly were involved in the beginning of illegal trading of MMTLP back in 2021. And the second one is Concord, and their clearing firm is Goldman Sachs. And do you think it is a coincidence? I don't think so. And the problem is really huge. But the downside of this news is the amount of this fine, just $6 million. Guys, it is nothing. It is absolutely nothing for Goldman Sachs, because last year alone they have a net income of more than $11.3 billion, and $6 million is just the cost of goods. So let me show you another news. Again, on frontnest.com you can find this article that is titled "The SEC now charges Citadel for illegal short selling violations." The SEC has now charged Citadel Securities for illegal short selling violations according to a new SEC filing published on Friday. The Securities and Exchange Commission says the market maker violated a provision of Regulation SHO, the regulatory framework designed to address abusive short selling practices, which requires broker-dealers to mark sell orders as long, short, or short exempt. To settle the SEC's charges, Miami-based Citadel Securities agreed to pay a $7 million penalty. $7 million is merely a slap on the wrist to the market maker giant. And yes, again, on the one hand, it is a good news that SEC is trying to fight against this illegal activity. But on the other hand, it is absolutely nothing to this huge company like Citadel Securities to pay just a $7 million penalty. And let me show you the comment regarding this news that was made by Mark Basile. And he wrote 14 hours ago, How about we get the X amount of money they made in illegal shorting, millions of transactions, and then fine them 100%. They should be fined as if it were an actual civil enforcement action and disgorge everything. And yes, why not to do it? Because if they made some bad actions and they admit it, why should they pay just a fraction of their total profit instead of paying it for 100%? And I have to say that I would enforce them to pay even more in order just to prevent this illegal activity in the future. And yes, for now we have a lot of attention to this problem, and definitely it is a good news, but we have a huge path ahead of us, and we should move forward, and we have to push our case forward in order to help not only MMTLP community but the entire retail community to win this battle and to have a transparent markets. So let me show you an update from Basile that he made just 16 hours ago. Let me show you this. MMTLP, stay tuned, filing coming soon. Once filed, I will do a space with the junk survey to discuss and go over what we can expect both from FINRA and the affiliate division. And let me show you this document. It is the first page of his brief for petitional appellant, and it is regarding the Horsani case against FINRA. And it will be filed in New York Supreme Court, and definitely it is a next step towards the resolution of our problem. And on top of that, let me show you that we have another update from MMTLP Resources, and the most recent article is titled "Lower says DC is paying attention to individual investors." And let me quote you this. In a series of tweets by Dave Lower, he is reporting that in recent DC discussions, MMTLP has been a hot topic. And he published these tweets on September 22nd, basically yesterday, and he wrote, "I spent the week in DC meeting with the members of Congress, their staffs, and plenty of people over at the SEC. We talked about equity market structure, abusive short selling, GameStop, and yes, even MMTLP. DC is paying attention right now to individual investors." He further clarified his comments in additional tweet replies. He added, "Your comment letters are working, change is happening. It might be slower than you want, but we are talking about changing decades of rules. It takes time." Every meeting they remarked about the number of comment letters and the passion of individual investors. Every meeting they wanted to know what regulatory and legislative changes could be made to make markets simpler, more fair and more transparent. We'll have a lot of more to say soon, but don't lose hope, don't get tired. Dave Lower. So, for anyone new to this saga, you might be wondering who is this Dave Lower. You can do it. You can do a deep dive on Dave and his somewhat bumpy but smooth out relationship with our community with this search link. Lower lists himself as an advocate for fair markets on his X profile and holds an unpaid advisory role with FINRA. Throughout the MMTLP saga, he has waffled a bit on his position, standing with the MMTLP situation, but later began calling for more transparency from the SRO. Dave was one of the guests when MMTLP was discussed on the Jon Stewart online program. After learning more about this community plight, he later tweeted additional support. Fast forward now to present time, we hadn't heard much from Dave in a while, but his recent tweets show that he is truly advocating for free and fair markets with a focus on retail investors and even MMTLP. His support for all of the above is welcome, and we hope results in real change for MMTLP investors and unfairness of the stock market in general. And guys, take a look on the bigger picture of the entire situation. For now, we have so many news that is appearing on the market and that is appearing on the different medias, that basically, in my opinion, we just started a snowball effect where a lot of news push our case forward, and this raises more questions to authorities, and these questions should be answered. And in my opinion, we are about to see some massive news that will solve our problem. And in my opinion, it will be within the next several months. So let me show you another update from Richard Hofman, another headliner of our community. And for those of you who don't know, he filed a lawsuit against FINRA, and he is in the process of arbitration with Fidelity. And he made this tweet 8 hours ago. He published basically a video on his YouTube channel, and I highly suggest you to follow his Twitter account and to subscribe to his YouTube channel, because he shows a lot of very informative information. And it is about 15 minutes long video where he describes his up-to-date information regarding Fidelity. And I want to tell you just one thing. The next deadline of their online Zoom meeting will be on October the 3rd. And before this date, definitely he will explain even more regarding this situation. And right after October the 3rd, we will see an update what was the results of this Zoom call. So, and I have to say that the closest deadline for now is the meeting that will take place on September 27th. And as you can see, even Gary Gensler 11 hours ago published this tweet and he wrote, "Mark your calendars, Wednesday, September 27 at 10 a.m. Eastern Time. I will be testifying before Financial Committee." And guys, I think this meeting will be crucial for him and for our case, because just recently he was asked by a Congress member regarding the MMTLP story, but he didn't answer at all. And this means, I think, we might see some huge resolution, some huge updates regarding our case on this meeting. And this means we have a lot of news to follow. And to do it, please subscribe to my channel, hit notification bell and hit the like button. In this case, you will not miss my next video. So, see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up.